Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that ES simply balanced within a range, but overall, sellers were more active in the overnight session. At this point, heading into the open, we have support at 2107 to 2109 and primary resistance at 13 quarter to 15 quarter. And bigger picture, as long as ES can hold above '07 to '09, it would leave yesterday's breakout intact. And if ES started failing and breaking below '07 to '09, it would signal a failed breakout. And at that point, we could get a move down towards yesterday's low at 0275 and most likely even test 98.5 to 2100.5. And, first test of that zone, buyers can still be active, but it's still a zone where we will have to gauge how weak the market is as we head into it and the level of volume that the market is running on. So on the downside, if we break '07 to '09 on high volume and high momentum, then we may only get a small reaction at 98.5 to 2100.5. It may not be a complete reversal off that zone. And, so that's something that we'll just have to be aware of, that as we go down, if the market breaks '07, then, 98.5 to 2100.5 is good location for buyers to step in on first test. But, if we've balanced for quite a bit ahead of it and, internals are extremely weak and the momentum is to the downside, then it may not really be worthwhile to trade that zone on the long side. It can still serve as a target if, the market is weak and, we're looking to short the market, but if the market has balanced for quite a bit ahead of it and there are a lot of warning signs, then 98.5 to 2100.5 might not be the spot that results in a reversal, but it is valid support zone, so we will have to gauge that as the day progresses. On the upside, 13 quarter to 15 quarter is the immediate resistance, essentially yesterday's VPOC, and near yesterday's high, 1575 was the absolute high from yesterday. And if we can get a breakout above 13 quarter to 15 quarter, then at that point there is no hard resistance on the upside, and we can just continue heading up, potentially up to the 2125 to 2127 area. But just keep in mind that, again, there is no hard resistance, so how high the market goes above 15 quarter is really going to be dependent on the level of momentum and volume we're seeing in the market. And we'll have to gauge that in real time as well, because it's pretty much a vacuum above 15 quarter. There is no clear-cut resistance. Now, looking at the other markets, so far we are seeing at least a lack of strength in NQ and TF. TF was showing a lot of intraday weakness yesterday, and so far it's simply consolidating. Now, on the larger time frames, nothing major has happened on NQ or TF, but on the smaller time frames, based on yesterday's price action, we are starting to see a market that is getting a bit tired, and at the minimum, it means we should be a bit cautious on long setups at these upper prices, because overall we're in a big uptrend, but short term, getting a pullback down to 98.5 to 2100.5, or even down to 91 to 93 wouldn't really be a big deal. It wouldn't really change the overall trend. So we do have to be just aware of some of these small warning signs that have started showing up in the market. And, for that reason, heading into today, we do have to be careful on the long side, even at 2107 to 2109. If there are a lot of red flags and warning signs in real time, let's say, a weak advanced decline line that's just getting weaker and a general lack of upside momentum, then it might be better to, wait for some better location, or wait for some real momentum to come into the market so that you can at least expect some short-term follow-through on the upside. Otherwise, when there's not clear-cut risk-reward, it's better to simply sit out and wait for some better and higher quality trade setups, right? So that's kind of the market we're in right now. As far as the econ calendar goes, we have the new home sales number at 9 a.m. Central, and Janet Yellen is on deck again at 9 a.m. Central as well. So, something to be aware of over there. So, heading into the open, keep an eye on 2107 to 2109 to help establish the short-term bias. As long as we're holding above it, technically, the buyers can remain in control. But at the same time, we just have to keep in mind that, the upside move here could be getting a little tired. And if we start seeing some heavier selling in NASDAQ and Russell, then at the very minimum, it'll make sense to be very cautious on the long side in the S&P, and that could even present a short setup on the day time frame for a move down towards yesterday's low and 98.5 to 2100.5, and then we'll have to gauge kind of how weak or strong the market is off of that zone, because buyers can still be active on first test of this area, but it may not be a complete reversal. It may just be a kind of a short-term bounce, perhaps back up towards 0275 and '05, something like that. So again, that's something we'll have to gauge in real time. So those are the main thoughts heading into the open. Let's keep this context in mind. Let's see if the buy side can maintain control this morning, and we'll take it from there.